Welcome to Master Trader's Weekly Trade Review. I'm Dan Gibby, and I'm going to show you a particular continuation pattern called a bear sandwich in connection with an overall breakout in this example. We are technical-based traders. We start with a compelling pattern. These are all bullish trades. It doesn't matter what time frame they're on. They apply equally to the short side. And we start with this, and then we overlay the other concepts that make up our approach, which includes such things as, okay, well, where is this pattern in connection with the overall trend? Is it on support or resistance? What do multiple time frames suggest? Is it showing relative strength or weakness? What are the broader markets and internals doing? And then you simply calculate position size and manage in between. So I'm going to show you a derivative of this reversal as a continuation pattern. This is a daily chart of Carvana. Notice all of our daily charts are this clean and simple. We have red and green candlesticks. We use 3 moving averages to help speed up the analysis. We have the 20, 50, and the red is 200 hidden down here. But you can tell here on the 20 and 50, it's in an uptrend. And now the stock has pulled back to the 50 period moving average, but we're pattern traders. So what is the pattern? Well, it's started here as a very sloppy buy setup. No turn, no significant support over here, minor support. But now it's going sideways, building. Every day is building another bar of support at the 50 period moving average, creating a multiple bar turn. Notice these 2 red bars. They suggested lower prices and had what we call no follow through to them. So this negated the green bar closing near the low, suggesting lower prices under this bar's low. The very next bar gapped up a little bit, and it's what we call a 180 reversal. So we came up with this name of a bear sandwich that simply means we have 2 big wide green bars engulfing a big red bar, and that's just an event. You still got to put it in connection with the other concepts that we reviewed. In this particular example, the setup is a compelling closing breakout engulfing this red bar, which is a bullish engulfing. It's a 180 reversal, and as we just discussed, it's a particular 180 reversal because of the extra green bar called a bear sandwich. So these bears in this bar are trapped. So we gave 2 option trades. We buy options as a directional trade where we want to profit on the underlying, and the benefit of options are they give us leverage and limited risk because the capital outlay is significantly less than buying the underlying stock or ETF. We actually did what's called a bull call debit spread where we buy 1 call. So we bought the in the money $40 calls. We sold a further out of the money call, which lowered our cost basis of this position. So by buying this, selling this for X days to expiration, we paid $2.50 a share as opposed to $41 a share. This is a closed trade. All of they're maintained in the members area, open and closed trades. We give the technical setup, the stock or option trade, 180 reversal breakout at the 20-50 period moving average, right here, 20-50. All of our trades, we also have a concept called a price void, which means for longs, there's insignificant resistance to the left to allow for a fluid move back up. Now, some people might say, oh, well, what about these overlapping bars here? The length of this consolidation and bullish price action dwarfs any resistance of there. So this could be maybe a speed bump, if you will, but our next significant target is this pivot high. And as you can see, had a beautiful fluid move into that. We actually had a beautiful 2-day move, which actually went through our short strike. So in retrospect, we actually capped our gains on this, but because it lowered our cost basis, we have a beautiful return on capital. Remember, we only paid $2.50 a share, sold half for $3.60, half at $4, and that is a beautiful 2-day trade. So that's a directional option trade. Actually, same setup. We sold a bull put credit spread. When we sell options, we use our same technical based approach. So I have a bullish setup. We just reviewed it. I look to sell puts under major support, and then obviously they have to be liquid or that just vetoes it, make sure there's no pending news. And then we have a specific checklist we go through to say, okay, is the premium that we're receiving adequate for this trade? So it's a $3 wide put spread for a couple days. I have a rough rule of thumb. I want at least 10% of the spread width, which this matches it. Same technical setup. And there's also a buy setup on the weekly, which is our concept of multiple time frame alignment. This one we held longer because we weren't capping our gains like on that directional debit spread. And we're always after just trying to get the meat of the coconut, the most of the premium in the shortest amount of time. We just went into trail mode, made a nice little 8.5% return, bullish setup. You can see this $36 short strike here. Once it traded over this bar's high into the void, we have a very high probability of confidence that by expiration, this stock is not going to violate this support level, and then we keep the premium that we received. Had you done a 10 lot, for example, this is posted in per share, so that would have been $370 went immediately into your brokerage account, yours to keep, as long as on 9/1 expiration it closed above the $36 short strike, which it obviously did in this example. If you'd like to learn our technical based approach to buying and selling options around the charts, go to mastertrader.com/spread trader. We have two depths of information on selling credit spreads. People love these because they're high probability. We're profiting from our directional bias, time decay, and volatility contraction, just calling a short-term top or bottom. Directional options is when you would otherwise be willing to buy the stock or short the stock, and instead we're going to buy call or put options or derivative strategies thereof to profit from our directional bias with leverage and limited risk. Hope that helped. As always, email my partner Greg Kappa or me with any questions. Good trading. Look forward to seeing you in the next trade review video.